But funding for airport projects through the debt markets is actually picking up. With me now for more on that is Gary Hall. He is partner and head of investment banking at Siebert Williams Shank & Company. Gary, it's good to have you. You've done a number of these airport deals lately. Why are investors interested?
Kelly, I guess, first of all, investors are still incurring a tremendous amount of cash. Inflows back to bond funds are really high. Coupon payments and bonds are maturing to give investors the thrust to reinvest. But they're chasing yield, and the airport sector, more than most, has more yield in our municipal market. So we've seen a slightly uptick in the transportation sector as a whole,
Wow.
where we're slightly up than we were year over year in 2019. Airports are slightly down, but we're since the DFW deal that we did in July, we said that we've seen the market open up significantly, and we have about $3 billion of airport deals done since then.
Wow. So to be clear, the deal you mentioned, Dallas-Fort Worth, was the first airline deal since the pandemic began. That was done in July. Since then, there's also been a bond offering about $1 billion for LAX. So these are the biggest airports in the country. Gary, what happens to some of the smaller airports, the ones that might service enormous regions but not a lot of population? Are they going to be left out here?
I don't know if they're going to be left out, Kelly, but I can tell you the process that we have to undertake with airport credits and all credits is a little different post-COVID than it's been before. We're seeing investors ask not only a lot of questions about the operating metrics of these enterprises, but delving into subjective factors. For example, we've been on a number of calls where investors want to know, what has been the responsiveness of governments to COVID? Have they opened up the economy too soon? Are governments prepared to make the tough decisions in making cost-cutting measures or staff reductions? So these subjective factors are things that we're preparing on our issuer clients to be able to answer and giving confidence that they have the political will to make the tough decisions, and whether it be an airport or a water, sewer, or a general obligation bond.
And you've also done work, you've done an issuance for the Chicago Transit Authority, for the Regional Transit Authority of New Orleans. So is this because these maturities are long enough that bond investors say, okay, it's 5 or it's 10 years, so by then the economy is going to be back to normal, I'll be fine? And I don't think that, just yesterday we were talking about JP Morgan in New York City is going to allow employees to work permanently from home for some of the time. And they said one benefit of this was that it would lighten the load on public transit. Well, I'm sure the public transit system doesn't necessarily see that as a benefit right now. So my point to you is, how long do investors have to get their money back here?
Well, a couple of things. So first, we are pricing the Chicago Transit Authority deal tomorrow. So we do not want to steal the thunder and say that it's done yet.